Hey all, welcome to ShareTrekc. This is Raj here, and today we got some exciting news to discuss in the world of stocks and investment as always. Today I'm going to be talking about Instacart, the popular grocery delivery company which recently made headlines by pricing its IPO at around $30 per share. Now let's dive into what this means for the average layperson that's especially interested in the stock market. Let's get started. Welcome back, friends. First things first, Instacart's IPO price of $30 per share was at the top end of the expected range, which was set between $28 and $30. This tells us that there is a strong interest in the company from investors. However, it's essential to note that Instacart has been in quite a journey in terms of valuation. Back in 2021, it reached a peak valuation of around $39 billion. But it has since then taken a significant hit due to shifting investor sentiments away from riskier ventures, especially due to the high interest rate environment and the uncertain economic condition. One noteworthy aspect of the Instacart IPO is that it is the first significant venture-backed tech IPO in the United States since December 2021, as per many reports. This is a big deal, and it could set the tone for another $1 billion plus companies that would be waiting in the pipeline to go public. And it can start a series of IPOs coming in, especially looking at the fact that very recently we had the successful ARM IPO. Now let us talk about the strategy Instacart employed to get here. To ensure a successful IPO, the company made a strategic decision to prioritize profitability over rapid growth, and this has done the task of demonstrating the strength and sustainability of their business proposition before taking it public. This will definitely help in the pricing of the IPO. And also this will give confidence to the public when they subscribe to the IPO. Speaking of numbers, at a valuation of $10 billion, Instacart will be priced at approximately 3.5 times its annual revenue, comparing this to some of its competitors like DoorDash, which currently trades at around 4.25 times the revenue. And if you look at Uber, which trades at less than 3 times revenue, it gives us some interesting insights into the valuation. While DoorDash's revenue growth is kind of impressive, they are still operating at a loss. So the 4.5 times valuation from that perspective looks very interesting. So I think our Instacart valuation for IPO has been very conservative to a certain extent based on what I see here. And let's get into the nitty-gritty of the IPO. Instacart is looking to raise a significant amount of capital, specifically $860 million, by selling shares of its common stock. This is a bump up from their earlier filing showing increased investor interest. It's also worth noting that only about 8% of Instacart's outstanding shares were made available in the offering, while 30% of those shares are coming from existing shareholders. Co-founders Brandon Leonardo and Maxwell Mullen, along with CEO Mehta, are those who are selling their shares. Additionally, former employees are also cashing in on the IPO with a combined 3.2 million shares up for the grabs. Finally, here is some food for thought. A successful wave of tech IPOs like Instacart's and ARM could have a positive impact on the market sentiment. It's something to keep an eye out on as we navigate the stock market in the coming months. So what are your thoughts on Instacart's IPO and the broader implications for the market? Please share your opinions in the comment section. I would like to read them. And with that, my friends, I think I'd like to bring this video to an end. That's all I have for today. So stay tuned for more interesting update. And I'm going to tap on other companies in the market where I see any interesting information until such time that we start getting interesting news from CRISPR Therapeutics about Exaccell and Bluebird about Lovocell and Ginkgo Bioworks about any of their new collaborations. Because apart from these three companies in the genomics sector, I don't see much happening. So we need to scan other investment opportunities as well while we are waiting for the genomics companies to take off. So with that, my friends, I bring this video to an end. I'll catch up with you again in the next segment. Bye for now.